The market progression we have witnessed for the last 200 years started in the 19th century. The agrarian economy was ruled by the commodities market. The 20th century, an industrial-based economy, was ruled by the stock market. The 21st century is an information-based economy. That's ruled by the forex market. With both the commodities market and the stock market, we buy something, product or commodity, shares in company or service, hold and hope. Then we sell for a profit. What we're really doing is converting cash into an instrument and then waiting for an increase in value. We sell the instrument and convert it back into cash. We are reliant on others, selling if we want to buy, but buying if we want to sell. Regardless of the catalyst, we see the results of this system. It is said that General Motors was the biggest failure of an industrial company in US history. This has been repeated across Europe and Asia. In January of 2010, it was reported that there were now 23 million people unemployed in the Eurozone. The response to this is that governments across the world printed more cash and put it into the economy. For the most part, this money was put into the banking system. Therefore, it is of no surprise that as the stock markets have crashed, the forex market has virtually doubled in size in the last 2 years. Companies that were quick to realize this, like Goldman Sachs, saw bumper quarterly profits. July 2009. It was said the bank had benefited from higher volumes of trading while seeing record revenues from currency and commodity trading during the second quarter. The next quarter, October 2009, saw massive profits, 3 times the earnings from the same period last year. Again, profits were boosted by second successive quarter trading in commodities and currencies. Even the Federal Reserve benefited from the large cash increases. A report from a few years ago from Daimler Chrysler acknowledged that more than half the second quarter operating profit was generated by favorable currency trades, indicating that they had made more money on foreign exchange than they did selling cars. The good news is, it's not just the banks and corporations that are making big money. Here's an article in Canadian Business 2005 that stated day traders are back and the hot new market is foreign exchange. Joanne explains there's a huge river of currency trades flowing past us all the time, and I think of my job as dipping in and taking out a thimbleful. Welcome to Currency Connect, your portal to the world's financial heartbeat. Would like to invite you for the next couple of minutes to investigate the forex market. In 1944, the major Western industrialized nations agreed to pegging to the US dollar. The US dollar in turn was pegged at $35 to the troy ounce of gold. This was known as the gold standard. By 1971, President Nixon abandons the gold standard, directly pegging the major currencies to the US dollar. By 1973, this system was abandoned and the floating rate system was implemented. Because of the floating rate, currencies move up and down in value against each other, mostly as a result of economic announcements. If an economic announcement is given that is good for the American dollar, money will flow into the United States. Tomorrow, an economic announcement may come out that's not so good. Money will flow out of the United States. Economic announcements are the tools that governments use to measure the health of their economies. Here we see the US debt clock. Economic announcements are given out all the time that affect the US economy. Things like gross national product or GDP, oil inventories, unemployment results. Today's global economy revolves around the US dollar, the euro, and the Japanese yen. The other major currencies are the Great British Pound, the Swiss franc, the Australian, and the Canadian dollars. The US dollar is the benchmark currency. When major economic announcements are released, the world reacts. If the US dollar goes down in value, it means that all the currencies against it go up in value. What we wait for is confirmation that the US dollar is trending up or down, and then we react accordingly. Foreign exchange, the forex market, is an electronic network of international banks. It's the world's first electronic exchange. There is no physical location for the forex market, it exists on the internet. Transactions are processed immediately in seconds. Prior to 1998, currency trading was available only to banks and large corporations. Since 1999, due to the advances of internet and software technologies, currency trading becomes available to the general public. Real-time currency charts are now built into the trading stations. Increasingly, vast amounts of foreign currencies began flowing from bank to bank, country to country, continent to continent. According to the Financial Times, daily trading volumes now exceed $3.2 trillion per day. This means it's a level playing field. Regardless of account size, we get real-time buy and sell rates. We all get the same information at the same time globally via the internet, as long as you have the software to be able to read it. Some of the market advantages are limitless liquidity, 24 hours a day, 6 days a week, transparency of the market, and completely recession-proof. Daily volumes of the New York Stock Exchange are about 100 billion, the global commodities market about 400 billion, and the forex market a staggering $3.2 trillion per day. In the stock market, we find dozens of markets. Tens, if not hundreds of thousands of stocks. The complexity is completely overwhelming. With the forex market, with the US dollar as the benchmark currency, there are 6 major currencies traded against it. All we need to do is choose one currency and get good at trading it. Buy or sell. If charts go up, we simply buy. If charts go down, we click on sell. We can make a positive exchange either way. Some forex terminology. A pip measures the smallest increment of measurement of a currency. There are 100 cents in a dollar. There are 100 pips in a cent. Here we see a currency pair, the euro against the United States dollar. Whatever is to the left of the currency pair is called the base currency, while whatever is to the right of the currency pair is called the quoted currency. It is showing us that it is taking 1.2674 US dollars to buy 1 euro at this instant in time. The pip is the last number to the right of the decimal point. With the demo accounts we provide, for a 1 pip move, that would equate to $10, gain or loss, per pip in movement. Question is, how far do charts move? Here we see a 1-day chart for the Great British Pound US dollar. Here we see an 800 pip move in a day, a 200 pip move in a day, a 475 pip move in a day. On the 5-minute chart candlesticks, here is a result of an economic announcement. Over the next 2 hours, we can see that the chart moves 270 pips. So what's involved in taking a currency trade? Firstly, we check the weekly economic events calendar. Then we take note of important economic announcements regarding the US dollar and the Japanese yen. We watch the charts when the data is released. We confirm the trend when one develops. We place our orders, and we get on with our day. Checking the weekly calendar is simple. We simply look down the left-hand column for the US dollar and the right-hand column for the importance. At the time of the announcements, we watch the charts. We confirm the trend when one develops using our custom-built trading station. Then we place our orders. We also set our risk management and exit points. Our level of risk if it goes the wrong way, and our exit point if it goes the right way. And then we get on with our day. In this example, we can see that the chart moved 110 pips. Our anticipated movement was a 30 pip gain, which equated to $300 per unit traded using the demo accounts we provide. The question is, how often do announcements occur? And the answer is, we read about them all the time. Here is an example of the Eurozone interest rates that were changed. We knew about that announcement days before. Here we see a 140 pip move over the next hour. Again, our goal is 10 to 20 pips. We can also trade oil, gold, and silver 24 hours a day, 6 days a week. Currency Connect was incorporated 9/11/2001. Currency Connect has been training people for over a decade. Currency Connect has removed all of the guesswork, research, and frustration. Learn to trade without risking a dime using virtual money in our demo accounts. Currency Connect has developed 3 solid, basic, easily understood systems. All you need is a computer and the willingness to learn. The Currency Connect team consists of Robin Costello, been trading for 10 years, co-founded Currency Connect in 2001, trading for over a decade, and teaches the 3 training systems you will learn. Eric Graham has been trading for over 10 years, co-founded Currency Connect in 2001, trains the advanced strategies. He's an information technology expert and a published author. The trading systems we teach are S1 and S2, in and out of trades from minutes to hours, specifically designed to be used when the economic indicators are released concerning the US dollar and the Japanese yen. The S3 system that we teach is a wider range of currency pairs, in and out of trades from days to weeks, specifically designed to be used when certain longer-term indicators are showing on the charts. Our training and support system includes custom-built trading station, charting software, demo accounts. There's no ongoing monthly fees. Also, workbooks and DVDs, live training online and in classrooms, ongoing never-ending webinar support. You can take the training as many times as you wish. The webinars are our most powerful support feature. They are live interactive support sessions we give twice weekly. Don't risk a dime. Learn to trade using the demo accounts until you are completely confident of your abilities. Develop a skill you can take into the rest of your life. Here's a quick "can I do this" checklist. Ask yourself, do I have a computer? Do I have an internet connection? Do I have a desire to learn how to earn $1,000 in a day without risking a dime? If the answer is yes, then this training system is for you. Thank you for listening, and please get back to the person that introduced you to Currency Connect, your portal to the world's financial heartbeat.